We have some of the saddest implied volatility going into tomorrow, but we're still going to get you those daily expected moves while we do some technical analysis for the SPY cues, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward, looking at GME and AMC as well. And one weird thing about tomorrow is as we have a very low implied volatility, we're seeing a lot of stocks actually hit their upward expected move. So we'll pay attention to that going into today because that means they all have a 68% chance to hold up at this level or see some kind of drop to get back into that zone. So let's get into it. Starting off with, let's go over to the SPY. Okay, let's switch over to the SPY real quick. That was the Qs if you were mistaken. And overall, nothing really has changed here. We're just seeing duds in the overall, the SPY itself, right? Across the market, we're seeing crazy moves in individual names, and that's the overall trading that has to take place. But look at this, the 2 hour still has not curled up. Even with those divergences down here on the 30-minute, we still haven't curled up. So what we want to pay attention to for tomorrow, and something very important to understand about implied volatility, this is what the options market is expecting for tomorrow, but we do get GDP tomorrow. So if that's going to be something unexpected to the market, we get some kind of unexpected reaction, we actually can get outside of these moves and see a big move up. We can get outside of these moves and see a big move down. Okay, that's very important to understand because when this thing curls up, we could see it go up to that weekly expected move very quickly if we get one of those rocks in our stream that really steers the water, steers the traders into one direction. We can see a big move if we get outside of these ranges. And those ranges to the top side, you have 547.68 to the top side there, and you have 543.34 to the downside. So just pay attention. As of right now, if you saw a big move down, it would make sense as well, right? This is where the top side of the monthly expected move for June was. You see how we pile up at it and then boom, we springboard off of it. Awesome, we rotate down towards it, curling back up. If this curls up, positive territory, positive move, there could be a big move that way. But if something bad happens in the market, well, this thing just has to drop and go negative. And what I would overall say about this is the curling over of the 30-minute. I don't think at this point you're trying to make another divergence. If you are, then you'll see it here, right? We can drop down to lower levels. Maybe we see some kind of move down towards the monthly or something like that. We see this setup across the way, triple divergence. We'll still be aware of it. But as of right now, I think it's 30-minute curls down, bad news. 2 hour curls up, good news, right? And I think that that good news could be even better because we have a low implied volatility for tomorrow. And as we switch over to the Qs, the other point you need to talk about when you talk about implied volatility, since this isn't the biggest move here, the Qs have had pretty good size moves compared to the SPY. And they don't going into tomorrow. Seeing some dramatic selling going on in the post market right now. We'll look into that maybe a little bit later, and I'll talk about it live tomorrow morning. Oh, and by the way, that course is still only $100 down in the description for like 5 more days. So you got to get it while it lasts, and then that price is going to double, okay? That price is going to double, so get it while you can. It is down there if you want to learn about these indicators and learn how to trade using the weekly ranges, all kinds of stuff, how to manage your trade. It's good stuff. But for the Qs, the one thing I wanted to point out, first of all, 482.69 to the upside, and we have 478.05 to the downside. So if we see some really good news, the 2 hour can curl up and we can see some kind of craziness happen. But as of right now, we're starting to drop off. I wonder what that is for right now because I wasn't really looking into that too much. I just like the technicals. But if this rejects and starts to head down, maybe the Qs need a stronger base. So say, okay, so the Qs actually could need a stronger base as of right now curling up. So that would look wonky on a 30-minute. But if we can curl down like this, maybe see this kind of structure on a 30-minute or an hourly, that might be a good sign. But the other thing to point out about these being low implied volatility is we could just get a whole nothing day where you kind of just do that, just like we did today, pretty much. I mean, 8:30 a.m. we open up, okay, we dip down a tiny bit, and then we dip down, and then we just kind of stay in this tiny little area all day. That can continue because the volume is going to be low because most likely they need liquidity to pay for AMC and GME, and that's very important. So Apple, this is the first one I wanted to talk about today, being this 30-minute chart, okay? So Apple in this area, you see the double top, and you see that that is confirmed as of now, getting some retests of that. Sure, it can turn right back up, but right now it is saying, hey, 30-minute looks like it needs a pullback. Now, why does it make total sense for us to pull back from right here? Well, if I go click on my other charts over here, if you want these, you can get them on Patreon. We see that the weekly expected move is right where we're at right now, pretty much. Like it's pretty much right above where we're at. It's right at this level. So this is what we need to pay attention to as of right now. We came out of our 68% zone. Now it's like 32% chance to see something crazy. but 68% chance that we're going to see this drop back into that zone by Friday close. So that's how we use those weekly ranges. You need to know how to trade around them. That's why the course is on a discount, because I think volatility is going to come in soon, and I really think that we need to have the skills to be better traders. And I think that me sharing that kind of stuff really can help you out. So right here we have that weekly expected move. Okay, now it's starting to react accordingly. 30-minute pullback is the most likely scenario at this point until that fully goes negative. So 30-minute curls down. Maybe we need to go grab some buyers down in this area. 30-minute curls down, curls right back up. Guess what? Positive territory, positive move incoming if that were to happen. As of right now on the 2 hour, just paying attention to that, if this rolls over, then this is why I was saying, you know, if you guys heard me on Monday even, I was like, I'm really leaning towards if Apple sees a push for some kind of higher or lower high makes the most sense to me right here, just because of where that weekly range is. I can know immediately that the options market is not expecting some kind of rapid big move up to here. They're just really expecting something like this, and then that might start to fail. So if this 2 hour, if there's more selling that comes in with that 30-minute pullback and that 30-minute goes negative, that 2 hour rolls over, that's not a very good sign, because that kind of tells me, hey, we might test this low, we might head even lower, and that would be a bad sign for Apple going forward. Tesla, this is another one right now that is well outside of its weekly expected move, actually. So weekly expected move, and we are outside of it. So 68% chance that Tesla ends at lower levels by the end of the week. And I want you to pay attention to that, because retail loves to trade this stuff. And you see where the 2 hour is right now. Now that can just, you know, rip up, keep going, okay. But we've seen tons and tons of traps in that same area. Actually, we've seen a trap for Tesla. So just be weary here, as this could just roll right over into a pullback, right? We'd like to see a pullback. You're late to the move. You're in here, right? The move to get into was right here. Boom, that heads upward. That's just swing trading 101. And then we need to wait for our next opportunity for that to happen again, right? We need to wait for that opportunity. Right now, would I be taking upside? No, I take a lot of profit around those weekly expected moves. And Tesla is one that I would definitely not be trying to call going long right now, just because of that 68% zone. That's why it really, really helps you out. And your MACD is telling you, hey, if you go long here, you're really, really chasing it at this point. So what could happen from here, though? That's a strong move. So what if the 30-minute pulls back and then it pops back up, and then we see some kind of reversal signal up here? That's what we'll be paying attention to for Tesla. It looks like at least a 30-minute pullback needs to happen. If not, a 2 hour pullback needs to happen for Amazon. So pay attention to that, or for Tesla, I'm sorry. And Amazon, this is very interesting, because around here is where I put that video out on Patreon. That's right, I give an update video of my thoughts. That is a little bit extra content for you over on Patreon. I pull up the weekly ranges and I show you guys all this stuff, so you're aware of it during market hours. This you have to get in the aftermarket when the market's not really trading. But if you join the Patreon, the link's down in the description. It's $7. You get all the weekly ranges for the stocks that we cover. You get monthly ranges, you get daily ranges for every Friday closing day, and on top of that, you get a video every single week where I just update you on what's going on. Now, a lot of the time I give trade setups. This video was more like a warning, like, hey, things look a little fishy, because even Amazon, at this point, it was down here. Now it's all the way up here, and guess where? Guess where that weekly expected move is? It's right here, okay? That weekly expected move for Amazon coming in right at these highs, and we see the selling start to come in. So this is as high up as Amazon is expected to go for the entire week, according to the options market. And so we would say from here, it would be likely to get some kind of pullback, because we're very high up on the MACD, a pullback for another bounce, right? Just like a swing trade, like this one here, like this one here, okay? Swing trade goes up, awesome, positive territory. That's what we're looking for, again, for Amazon for now. Now, if we kind of zoom out on things, say a 2 hour, that looks like it needs a pullback, right? So this move is very, very rapid to the upside. You still have divergences across the way on the RSI, not necessarily the best on the MACD anymore. So not at the same time. So that would tell me this is most likely a pullback. But if we zoom out to a daily scale, we can just see like this thing is creating divergences all across this. We mentioned this multiple times, saying if we go higher, watch out for the triple divergence. You have like a quadruple divergence on the MACD in this area. So if we start to peel down from here, it might not be good news. That is a good sign of a reversal if this is able to cross and go negative for Amazon. Nvidia, this is weird because Nvidia is one of the only ones that has not necessarily gone up to its weekly expected move. Now, its weekly expected move is higher than here. It's about what is that, 9 points higher than here, and that would be a good retest. But this is the same reason I said on Apple a lower high is what I'm looking for Apple, is the same reason for Nvidia, and we're crossing up at the end of the day, which tells us positivity. Now it's selling off in the post market, interesting there, but this crossing up right here says, hey, possibility for a bounce if I can go positive. Hasn't gone positive yet, but the probabilities here going into tomorrow, if you're just not paying attention to the post market, would say, yeah, up looks like a bounce looks likely here. If it goes positive, hey, that can be a good move, but I'd really start to watch out somewhere between 136 and 135. I think that area could prove as some sort of resistance, just because the options market only prices it in to go that high. So what I'd be paying attention to, the 2 hour has crossed up. So right now the probabilities say, upside movement. But if the 30-minute wants to just roll right back over, where is it? It's right by negative territory. So you did get both of these to roll up. So most of your probabilities are saying upside, unless something crazy is going on with some information coming out in the post market. We'll pay attention to it. But the indicators here are telling you, hey, yeah, went up, pulled back, going back up. And look at this, like we break through a zone, we retest the top of it, we retest the top of it, boom, we head higher. And there's probably a 5-minute divergence right here. Very, very good. But for now, the main point is the 2 hour did cross up and it's within range of going positive. It's going to need some time to go positive. I'm just saying, watch out if that thing rolls over at any time, because that could be a bad thing for Nvidia. But for now, all the probabilities, all the MACDs are telling you, hey, some kind of bounce is here. For Nvidia. AMD, this one here, starting to drop off too. So I don't know if there's just AI bad news coming out, but we were looking for, hey, that 2 hour needs to curl back up. Did it ever curl back up? No, it didn't. So the 2 hour not telling you any more upside. Where could AMD end up if it wants to see more downside? Well, we could end up, kind of touching the top of this zone. That's pretty much where I'd expect the lowest point for AMD to go, unless we see something crazy, and that's definitely possible. But the 2 hour has never curled back up, meaning it can't go positive, meaning it's not even saying bounce. So there's no reason for a trade here. We talk about 3 to 5 reasons to take a trade, right? And position sizing a little bit in that. And this really doesn't it just doesn't have any reasons to take a trade. Like even here, you don't even have divergences. You don't have anything like that. I like trades that have strong basis for a good solid bounce. This here just looks like, hey, it could bounce up, but it's not even oversold yet. So this thing could just keep trailing down for a long, long time. And then maybe we need to pay attention to this point down here. So AMD just not looking the best as far as trade setups go. Meta, this one here, I got to double check for Meta. I believe it's hitting its weekly expected move. Guess what? Guess where it is right now? Well, the weekly expected move is right here, and we're hitting that again. So it really helps to have these. Like, I don't share this info a lot. I just want to make sure to help you guys as much as possible with what's been going on in the market. And so having these weekly expected moves is very, very useful. So I highly encourage you to get the Patreon. It will help out your trading. Many people live can tell you how it has helped them with profit taking or finding good swings. So right now, what do we see? Well, we see Meta giving us a slight bit of weakness as it hits that weekly expected move. So are we going to get a good GDP and just burst through this and see something crazy? Or are we going to pop up for a second, just see that fade back down, and boom, you got a little divergence here. The only problem with this divergence is you're not very overbought on the 30-minute. I'd really like my divergences to at least go into overbought territory, but we can take it with a grain of salt for now and just say, hey, well, the 30-minute is pulling back. It's not confirming upside yet. So pullback is still on the table for Meta. And Meta right now, if you look at where that weekly range is, where is it? It's right by this high. So even as of right now, you could be creating some kind of big divergence that's really, really close to going negative. So watch out if we get bad news and you start to see dramatic price action, because that could mean maybe we're going to take out this low and head a little bit lower. We'll pay attention to that for Meta. As of right now, 30-minute pullback looks like the most likely scenario for Meta. Now, AMC and GME, we got to talk about these because AMC did a big thing. It curled up on the 2 hour. If you really want to look, the last time we saw a big move, boom, it curled up with a huge move on the 2 hour. Even with the selling coming in, it continued positive moves here in positive territory. So that's a key thing to remember. Right now, you're at the same level where you curled up last time, and you can see a positive move as long as that actually goes positive and remains positive. So this is a good sign for a bounce. This is a good sign for an actual good price movement, good positive price movement to the upside. That's very important to understand. And if you want to see some kind of squeeze, well, you got to get above where they don't expect to get above, and right now they expect to hold out right? As high as it could go, they really only expect 536. So you got to get above 536 in order for that to happen. But now that the 2 hour has crossed, if that can remain crossed, which the 30-minute, you don't want that to cross back down. Truly believe you do not want this 30-minute to cross back down unless it creates another point of divergence down towards 437, just a support line that we were able to find early on throughout the big pump. We were just like 437 when someone asks, I go find a support level, and you'll learn about support in the course as well a little bit. So what do we notice here? Well, if this curled over and curled back up, right, this would be a solid little divergence down here for AMC. Now, you already have some divergence behind this move, so this bigger pop right here makes a little bit more sense. And look at this, 30-minute divergence is a, you guys think I'm crazy when I say it, 30-minute divergence likes to roll up 2 hour charts. Look at that, it rolled up a 2 hour chart. Now you just got to go positive. So when we flip over to GME, this one's a little bit different just because you have the 2 hour and it looks like it wants to go positive. You almost had a little divergence down here on the 2 hour. You have it on the 30-minute, but that's why we were mentioning it. It curled up and now it's kind of showing some weakness. So if this is going to get continued weakness, if that 2 hour just curls back over, that means it is not the moment. Your 2 hour momentum is no longer with you, and test the low, go make a new one. So pay attention to that. You really need this to get positive. You notice this back in the past, right around here is where we started to go positive. Literally on this green bar right here, we started to go positive. What happened next? Boom. So this is how important that center line is. We talk about it a ton in the course. So the 30-minute here, what do we need to happen in order for this thing to remain positive? Well, we don't want it to cross down on this MACD. So pay attention to that. You do not want it to cross down on this MACD, because if it does, it's still within range of going negative. You have the opportunity, maybe, just maybe, make a higher low. But the overall grand scheme of things, if you start going negative, hey, it's test this low, go make a new one. We'll look out for another divergence if that's some kind of fake out. But that looks like a very likely scenario. But is it the most likely right now? No, it's not crossed over yet. So right now, I would say it's still bullish in a positive trend for GME. The overall goal here for GME is to get this daily positive. Okay, this daily goes positive, you'll get a few days where daily momentum just takes over. You really will. Now, the last thing I wanted to mention was the volatility. Okay. Want to do the volatility. Okay, so volatility, I talked about this live, how I was looking for some kind of divergence for volatility. You guys know, if you've been here for a while, volatility is one of my favorite things to trade. It really is. It and Apple are two things that I love to trade. And what do we notice down here? Well, around this area right here, I was saying, hey, this looks like it's going to roll over. Watch out for a divergence for volatility, because that can turn up a 2 hour chart. And look at this. If we start to confirm this, that would mean volatility could cross that center line and go back into a positive trend on a 30-minute. Now, we got to pay attention to GDP. It's all based on news. Just because there's a divergence doesn't mean it has to play out. But I just showed you how those 30-minute divergences like to roll up 2 hour charts. And look at this volatility pop. Well, we might be getting another one with another higher low. So just pay attention to volatility. And the reason you have to pay attention to volatility is because of the dollar. The dollar is just going higher and higher and higher. And what is the market today? It's green, and the dollar's green at the same time. Again, so this just tells you there is some insider selling happening. If you go into a 2 hour chart, we like to do this a lot to say, hey, or pre-market a lot of the time overnight, this is when the insiders like to do their thing. Guess what? They all were selling in the pre-market. So before the market opened up, we saw the dollar going higher. Now, that could be TLT and the bonds reacting, but I don't think that the bonds reacting like this is the correct reaction. I really don't. Because what I was seeing was home sales dropping. I was seeing home sales dropping, and I think that overall says, deflation to me. But we're getting this curl up of the MACD on the daily, so I have to pay attention to it, looking out for some kind of retest. GDP will affect this, and then the next day we get PCE. So it's a time to really be on your toes, and I think that's the main takeaway here is you're seeing a lot of price action hit weekly expected moves, and that's very important to pay attention to your risk around there, because this would tell you that there's not a lot of reward to the upside, and the risk here is that you're going to land back in those 68% zones, or even and lower, right? Go deeper down into those zones. So I'd just be paying attention. We can see something crazy to the upside, or we're going to see a normal behavior where these stocks start to, close back back into their ranges. So we're paying attention to those things, paying attention to our signals. But I really just appreciate you guys being here, trading like water, you know, telling me about your wins, telling me about your losses. That's perfectly fine too. I like to hear people taking accountability for their trading and saying, hey, I'm a little new to trading. I made a mistake, but now I know about that mistake. I really love hearing those kinds of things because that is the sign that you could be a good trader over time as you learn from your mistakes. And something with position sizing and managing your trade will really help you so you don't lose a ton of money, so you can continue to do so. So thank you guys so much for watching. I really appreciate it. Liking, subscribing. Make sure to check out that course if you're interested in learning, or joining the Patreon if you want those weekly ranges. But other than that, I'll see you guys tomorrow morning for the Stock Market Live Show, and have a good night. Peace.